This is the Value Investor Podcast with Tracey Ryniec. All things value, all the time.
Welcome back, value investors. So there's a lot going on in the markets this year. And for value investors, we had somewhat the best of times when the sell-off happened. There were some deals on some stocks when that happened, but it reversed course very quickly, much like 2020's sell-off when Warren Buffett didn't even get a chance to buy anything in 2020. So he remained on the sidelines. He remained on the sidelines again this year here in 2025 after that quick trade war sell-off after Liberation Day. Doesn't mean we're not going to see another sell-off again this year in 2025 that some of us could cash in on. But stocks have rebounded pretty dramatically off their lows. Not every individual stock, but the overall indexes have. And the S&P 500 now is less than 3% away from its all-time high again. So we're back to a little bit of stretched valuations in a lot of the growthy type names, especially on the technology side. And I was wondering what was happening with the value stocks because, as you know, I run the value investor portfolio here at Zacks, and I've been running my screens. I have a bunch of stocks on my watch list, and I'm waiting to get them as cheap as I can. And they are not getting cheaper. They're getting more expensive on this rebound. So what is going on in the value screens? I thought I would run a couple of them for today's episode just to kind of see where we stand, what's showing up, where the value still is, and is there any value out there right now? I know that there is, and one of the big areas is in the banks. But I was hoping we wouldn't really see much with these screens with the banks. So I had to pick the screens pretty carefully here so I could maybe try to avoid the banks being in there. And let me reassure you, I'm not anti-bank stock. I do own some in my own personal portfolio and in Zacks Value Investor and also in the Insider Trader. The bank insiders continue to buy shares even after this sell-off in everything else when, they have options on what they can buy. They don't have to buy their own company stock, yet they are still diving in on many of the smaller regional banks. Many of them also have very good Zacks ranks of number ones, which is the strong buys, or number twos, which are the buys. And so it all kind of makes sense. The earnings are on the rise for a lot of those smaller banks. They are being ignored by the stock market, but not by me, but they still haven't been able to break out of their kind of narrow channel they've been in for many, many years. Some of them, over 15 years. They sold off in the Great Recession, and they haven't really come back even in that amount of time. So it's been a very difficult trade. I've talked about it here. We've covered some banks here. I've been saying I want to do a bank podcast, so maybe I will do one coming up now that I just espoused how great all the fundamentals look with the banks right now. But today I wanted to avoid those stocks because I know most of you still hate the banks as well. So you're looking for other value stocks right now. So the first place I went to was on Zacks.com. I went to the screening tools. I did look at the predetermined screens. I did not want to run our favorite one, which is the classic value stocks. We run that numerous times over the course of the year to get the cheapest of the cheap stocks. Remember, that includes price to book ratio, price to sales ratio, PEG, price to earnings, price to free cash flow. It's the whole 9 yards of every kind of value fundamental you could look for. And then it throws in the rank. So we usually get under 10 stocks for that one. But again, I did not want to run that one for this screen because I thought we might get some banks in there. And I want to try something different. I want to try some of the screens we haven't used because there's, a decent number of them for value that is on the predefined screens. So I looked through the list, and the first one I ran was Discount Fundamental Strength. And this one says this screen identifies stocks with strong underlying fundamentals, obviously, and low valuations, along with solid balance sheets and a history of profitability that are reasonably priced. So it turns out it includes the cash ratio, the debt to equity ratio, the ROA with the 5-year average, and the price to sales ratio under 1. So I ran this one, and it just gave me 2 stocks. That's it. There's not much discounted fundamental strength out there, apparently. Just 2 stocks. I'll tell you what they are, but I'm not going to focus on it because I did want to do another screen because I was like, well, this doesn't help me that much to only get the 2 stocks here. Let me look. Does this one? No, this doesn't even include the rank on this one. So no rank, and it's still only included 2 matches. Okay, so the first stock is CommScope. We've talked about this one before, ticker COMM. It has a price to sales ratio. Obviously, it had to be under 1, but the price to sales ratio is 0.27. The cash ratio is 1.68. It has beat 2 times in a row here, $1.3 billion in market cap, no dividend. PE ratio, even though that's not in the screen, is just 6.6. So I'm liking all of that. And its rank right now is a 3, which is the holds. That's 80% of all the Zacks rank stocks are in the holds. And Comstock is a premier provider of infrastructure solutions, including wireless and fiber optic solutions for communication networks. It's been around since 1976. It's in North Carolina. So that's CommScope, not CommScope. Did I say it wrong? It's CommScope. COMM is that ticker. The second one is a home builder. Surprise! They're still cheap. And they're cheaper now because they have sold off. But this one does not have the rank, like I said. So you're not going to get the issue that a lot of the home builders have right now, which is cuts in earnings estimates because those earnings are on the decline. So this one is Tri Point Homes, ticker T as in Tom, P as in Paul, H as in Harry. They're a national home builder. It says they're in Arizona, California, Nevada, Washington State, Texas, Colorado, Maryland, and Virginia. So pretty good popular states there, but some of those states having some issues now on the housing side with inventory rising, prices are coming down. That's going to affect earnings. 2025 earnings for Tri Point Homes down 38.9%, sales down 20.8%. This is all expected to decline. It hasn't missed in 5 years. So we have that very good track record of beating, no dividend, PE of 10.3, price to sales 0.6, cash ratio of 1.8. So you have to weigh what might go on in the housing market, and those mortgage rates remain high. Again, all of the home builders look like this. Shares have come off. They're not back to 2022 lows by any means, and a lot of their gross margins starting to fall off of those record levels now. So it's going to get a little more difficult this year, probably into next year. And you have to watch what's happening with the labor market. If we have more job losses, it's going to impact these home builders as well. But try to get them cheap, and they might go cheaper. We'll see. But that's Tri Point Homes, ticker TPH. Okay, so then I was like, well, that doesn't help me much. Just 2 stocks there. So then I decided to run some more of these screens. And I stumbled across one that is value stocks at 52-week highs. So I do like the concept of that. What is cheap, but also still trading at those highs? As I mentioned in the beginning, a lot of stocks have rebounded. The S&P 500 is nearing its all-time high and 52-week high. So why not with value stocks? And something good would have to be going on there for a value stock to be, back at those high levels. So this one looks at the 52-week high. It does include the value score of A. So you have to have the A for the value score. The Zacks rank is included. It has to be a number 1 or a number 2. So I'm liking all of that. And then you just have to have that price within a certain percentage of the 52-week high. It looks like it's within 10%. So you're getting that 90 to 100 level. It was or is close to the 52-week high. Some of the stocks, however, were like hitting it. So you like seeing that, like what stocks are actually at their highs right now. So I ran this screen and it's 28 matches. That was more than I thought. And what's in this screen? Well, I guess I shouldn't have been surprised, but I still was. I'm not really used to seeing the gold miners with the high Zacks rank, with the still being value cheapness. And now, of course, they are near at least 52-week highs. Many of them are not yet at all-time highs with gold over 3,000. So some of the gold miners in here, B2 Gold Corp, ticker BTG. B is in boy, T is in Tom, G is in George. I own this in the value investor and in my own personal portfolio. It is a junior miner. It's up in Canada mostly, but they are launching a new mine actually, which is somewhat rare. So they're spending a lot of money on that. But it is at its 52-week high right now. So it's got the 100% number in the price as a percentage of 52-week high-low range. And it is a number 2. So there's B2 Gold. There's El Dorado Gold, ticker EGO. E is in Edward, G is in George, O. It's at 99.34%. Let me see. Some might be gold miners, and I just don't know because some are small little names that you don't know. There's a Fortuna Mining Corp, ticker F as in Frank, S as in Sam, M as in Mary. And I am not following that one, but it's at 100%. There's Kinross Gold, KGC is the ticker. They're at 97%. No Newmont on here. I did see another one, Anglo Gold Ashanti, ticker AU. It's also in the value investor, and I also own that one. It is one of the bigger cap gold miners, headquartered in the U.S., but global mines, and they're at 94.85%. So that looks like, oh no, there's another one, Cantera Gold, ticker CGAU. CGAU. They are number 2, and they're at 90.83. So like I said, that's a lot. How many did I just spin off there? 5 or 6 at least out of the 28 are gold miners. Let's take a look at one of them. I wanted to look at El Dorado. It's one of the big cap, well-known gold miners. And they're the number 2, as I mentioned, again, ticker EGO, 4.3 billion market cap. They did miss last quarter, but it's not a big deal with these commodity companies because it is, sometimes they do have difficulty getting the commodity out of the ground, whether or not it's oil or gold, silver, copper, whatever it is. These are factors when you're looking at the mining companies and not the pure play commodity. But earnings expected to rise here, only 4.5% here in 2025, but 54% in 2026. And the earnings estimates are up and to the right. That's why we got the higher Zacks rank, the the buy rank. Number 2, forward P of 12.8, PEG ratio of 0.3. This shows no dividend on Eldorado Gold, but some of these, because the free cash flow is so good with gold over 3,000, they are doing share buybacks. Some are doing special dividends, and then some have the variable, or they're combining all three. So keep that in mind. Go, read what's been happening in the last earnings report and what they're doing with all their free cash flow. Some may be paying down debt as well. These miners have a lot of debt. So I know some of you really look for that when you're looking for value stocks. And so a lot of these commodity plays, it's just the debt level is too high for you. So I get that. But right now, with gold at new all-time highs over 3,000, this is the time when their free cash flow is going to be great. And they've been waiting many decades since really, let's say since the mid-2000s was the last time gold was surging. But that's about 20 years ago now. So they've been waiting 20 years ago for another breakout. And here we are. So we'll see how management does at a lot of these gold miners. You can buy the ETFs. So then you own a basket. I do kind of recommend that as well. All of them are cheap right now. And as we've seen, a bunch of them are now on a screen like this. So cheap, high Zacks rank, and now at the 52-week highs. So Eldorado Gold, EGO. Then I saw a couple other interesting stocks on here. So there was a fertilizer stock. We haven't seen fertilizer stocks in a long time. This is also on the commodity side. So the urea, the potash, the nitrogen, those are commodities. The prices have, it goes in cycles as well. We had a big upcycle, then it crashed down. So the earnings have all come down. The rank was terrible on all of these for the longest time, but Mosaic showed up on this. It's at the 52-week high, but if you look at the chart, it's nowhere near its all-time highs. But given how depressed these stocks were, it doesn't take much to have a one-year breakout, and that's where we are. Mosaic, ticker M as in Mary, O, S as in Sam, Zacks number 2 rank. The A for value, of course, is still paying a dividend. A lot of these fertilizers had to cut their dividend because the earnings were just crashing down, and Mosaic's earnings are down, but dividend 88 cents a share annual, now yielding 2.4%. So they are still trying to give you something for your patience for sticking around the last 3, almost 4 years now with nothing to show. While the S&P 500, was hitting new highs. So how cheap is it? Forward P of 12.8. It has a PEG of 2.1. So that's a little bit pricier on the PEG side. But as I mentioned, the earnings have crashed down. So 2023 earnings fell 67%. 2024, they fell another 44%. But 2025, this is where we get the better rank. Things are improving a little bit off of those very low levels, though, but up 45%. But 2026, looking a little bit like it's not going to hold, and back down to 18% decline there. But the analysts maybe were a little bit too bearish after all of this time. How could you not be, right? And yes, looking at the estimates, 5 estimates are higher in the last 30 days for this year. None are lower. So something has improved in the fertilizer market to make everybody, had been just too conservative there. And we're at $2.88 right now. Remember, the dividend was 88 cents a share. 30 days ago, before these estimates were revised, we were only at 220. So that is a big revision. They did have a beat this last quarter after several misses in a row. And so that's bullish. Finally, they're starting to maybe see something good going on in the fertilizer market, but they only beat by 10 cents, yet the analysts have raised by 68 cents for the year. So the outlook had to be good. And maybe we're seeing a rise in some of these fertilizer pricing now. But that's how these roll. You really have to get in at the low and then ride it up and then get out. You can't buy and hold a lot of these commodity plays. Trust me, I've learned from experience. I've been stuck in some of these. But Mosaic is off of those lows pretty dramatically now. And that's why we got the 52-week high. But the stock has just gone nowhere for so long. As I mentioned, it's not taking that long to get to this place. It doesn't take much if it's just kind of decline, and then moving sideways for a while. And now on this good news and the rising of the earnings estimates, we now finally see a little bit of a breakout from that channel. Can it hold this? So over the last year, Mosaic is now up 25% on this breakout. The S&P 500 is up 11, but the breakout has mostly been in the last month, along with everything else off of the Liberation Day lows. Mosaic up 19.6% in there, and the S&P up 5.7. So it's been a big boom. The 3-month chart, it's now up 53% in the 3-month chart. And so this actually started rallying after the Liberation Day kind of hit, and then it's been rallying ever since. But again, it is cheap, and we've got a change in the direction of those earnings estimates. This is why I like to screen with the Zacks rank. It can uncover if something's going on in a company and that we may not be noticing. It is happening with the banks, as I mentioned earlier, but everyone's just ignoring those. But when I saw Mosaic on this list at new highs and with the number 2 rank, knowing what was going on in the fertilizer market, I'm like, what's happening there? Something I was not paying attention to. So might want to keep it on your watch list. Check it out. Let me just quickly look real quick to see if are we getting the same kind of bounce in like CF Industries. It's up 20% in the last 3 months as well, also off those lows. So I do think that maybe we're at a turn in some of these fertilizers. So keep that in mind. Let me see. I thought there was, well, that's at least 2 of the big ones there. But also keep in mind that there is tariff issues with some of the fertilizers. A lot are Canadian companies. CF is not. They're in the U.S. I'm looking to see. Mosaic is Minnesota. And so I'm not sure also where they produce, because a lot does happen up in Canada. But this looks like maybe they are in, yes, they have some in Canada. They also have facilities in Florida, Brazil. So keep that one on your list, Mosaic, MOS. And then there was another one that I was like, what's this stock? I haven't been paying any attention to it for obvious reasons because it's Bitcoin Depot. Bitcoin Depot. B as in boy, T as in Tom, M. BTM. M as in Mary. And I originally thought when I saw Bitcoin Depot, it's got the number 2, the A for value. What's going on? Is it just like a MicroStrategy? It owns Bitcoin now. That's what I assumed, but I was wrong. It actually owns the Bitcoin ATM networks. And so it's more of like a financial play, finance, because it is offering Bitcoin through these ATMs, but it does also own some Bitcoin. So it has recently added to its Bitcoin hoard, because if you have the ATMs, I guess you have to own some Bitcoin doing it. But the earnings have really turned around here. So 2024 earnings growth of 61%. 2025, it looks kind of flat for now, but 2026, 10.9%. It only has a market cap of 288 million. So this is one of the small caps. But I had to go in and even look. No, they're supposed to see 176% earnings growth this year. So they lost 60 cents a share last year. That's why no one has been paying them any attention. I don't want a small cap Bitcoin ATM provider who isn't making money. But suddenly they're expected to make 46 cents this year and then 51 cents next year. So maybe they're figuring out the cost structure and they're able to, get onto the profitability side here. Last quarter, they made 20 cents. They were only expected to make 9, so it was an 11-cent beat. The prior 3 quarters, they were in the negative. So now suddenly 3 estimates are higher in the last 30 days, and we have 4 estimates total for earnings. So there is some coverage here. 1 did lower, so they maybe are just trying to figure it all out as I am. And the estimates went up from 46 from 34 cents. So the analysts already did expect, positive earnings growth. Sales expected to be up 9.5, PE of just 9.8, no PEG, probably because those earnings only, recently going into the positive there. So I kind of like this play. What am I saying? I'm liking something with Bitcoin in it. Many of you know my kind of, not owning Bitcoin stance, but first quarter revenue up 19% to 164 million. Adjusted gross profit up 92% to 33.1 million. And then it says Q1 net income up significantly to 12.2 million compared to a net loss of 4.2 million last time. And some of this, it does say they had powerful cash flow that we can generate once fixed costs are covered. In fact, with the cash generated in Q1, we strengthened our balance sheet by increasing our Bitcoin holdings and building our cash balance, positioning us for continued growth and flexibility. They're focused on scaling responsibly, both domestically and internationally. So the increase in revenue was driven by increased kiosk deployment and higher median transaction size, while Bitcoin prices continue to rise. Expenses declined 7%. That's what I want to see. And you did get the 20 cents net income for the first quarter. Where is their cash? Cash equivalents and cryptocurrencies as of March 31st were 43.3 million compared to 31 million at the end of 2024. So that was just, a couple months ago, but that's a significant free cash flow. I love companies with free cash flow. They used 7.8 million in the first quarter to acquire 83 more Bitcoin, bringing the total held investment to 94.34 Bitcoins. So that's what they own now. And the price of Bitcoin, let me even look. It is over 100,000, I believe, but that changes daily. Let me scroll over and see where we are at now. Where is it? Got to go all the way to cryptocurrencies. Okay, Bitcoin is at 104,381 here on June 5th, and they own 94 coins now. This is a small cap, as I said, so keep that in mind. But I am suddenly liking Bitcoin Depot, ticker B as in boy, T as in Tom, M. Be warned, however, it is volatile and the stock is trading under $5. It is at or near that 52-week high level. And let me just kind of look and see what it's done. Obviously, when it had the great quarter and all those earnings estimates are on the rise, much like Mosaic, that's when the stock got noticed and has taken off. Otherwise, it was lagging. So Bitcoin, let's do year to date. Year to date, this Bitcoin Depot up 167%. Most of it in the last month, up 190%, but it is under $5. So you're getting that big boost. And keep that in mind because, it's been down on its luck for a while. Overall, since it launched in 2023, since it went public in 2023, the shares are still down 55.8% in that time period. But again, it's got a good Zacks rank now of number 2, which is the buy. It's got the A for value, just for FYI purposes, A for growth, B for momentum, and A overall style score. And it's a small cap. So when those move, this will too. And when Bitcoin moves, because they do own some, this will move as well. So keep that in mind. Bitcoin Depot, BTM. B as in boy, T as in Tom, M as in Mary. Okay, I'm going to stop there because that's a lot of stocks that I've mentioned on this episode. But again, it's fun to run these screens. I'm kind of running them here when, I'm doing this episode. And although I did look in advance that Bitcoin Depot was on the screen, but taking a deep dive along with all of you, and you have to do your homework on a lot of these stocks, especially the small caps that are not as highly covered, although Bitcoin Depot does have several analysts on it. On the main page on Zacks, if you're just on the quote page, you can actually find out how many analysts there are versus just how many estimates, because they might not always be the same on the Zacks rank when you're looking at the agreement area and the changes in the revisions in the estimates. Sometimes it'll say, 10 here, but there could be 12 analysts actually covering, but only 10 have made the changes in the last 60 days. So if you're on the main homepage and you just put in a quote in the quote bar, a ticker in there, and you scroll down, it has Zacks rank factors. And there's all these. It says agreement, magnitude, upside, surprise. That's the 4 factors of the rank. And under agreement, there's a little box there. It says number of analysts now. And then underneath it says number of revisions. They are not always the same thing. Then it'll tell us whether or not they're up or down and the percentage of the revision agreement. The higher the percentage of revision agreement, the more the Zacks rank likes it, and you get a higher Zacks rank. If it's, 80, 90, 100%, all the analysts are in agreement, either up or down, then that influences the rank. So for here, we're at 75% in agreement for this year, 100% in agreement for next year. One analyst did raise their earnings estimate for next year as well, and nobody has cut there. So a little bit harder with small caps because sometimes you only do get the one analyst. That's all we have covering it. And so in that case, it's going to be 100% agreement, up or down, whatever they're doing. So that makes it a little bit harder for this factor, for the agreement. But it's hard to get, analyst coverage on some of these small caps. And we see that with especially the banks, but also something like Bitcoin Depot. So let me recap a lot of the tickers we talked about today. There was CommScope. COMM is that ticker. This is from the Discount Fundamental Strength screen. TriPoint Homes, ticker TPH. T as in Tom, P as in Paul, H as in Harry. Then we did value stocks at 52-week highs with the ranks of 1 or 2. So top ranked stocks at their 52-week highs, but they're cheap. And I talked about a bunch of gold stocks in there, but the one we focused on, El Dorado Gold, ticker EGO. Then we talked about Mosaic, the surprise fertilizer, making a comeback here, ticker MOS. And then Bitcoin Depot, ticker BTM, surprising with going positive on earnings, got free cash flow. It's still cheap. It's on the services side of Bitcoin. So something to keep in mind if you're thinking about your exposure to Bitcoin. This is another option. So be sure to subscribe so you don't miss a single episode of The Value Investor. So as much as I thought maybe there's not a lot of interesting things going on in value right now, except for maybe in the banks, I was wrong, because we still managed to find interesting outside of the banks in just these screens. But we've got a lot of momentum going on and still got some cheapness. So be sure to subscribe to get our value stocks every week. We're on Amazon. We're on Apple, of course. We're on Spotify, anywhere you can get podcasts. Get us on YouTube. Our podcasts in the audio format are on our YouTube channel for just podcasts. You can get all of our podcasts, including the ETF Spotlight and Mind Over Money. Many of our podcasts, except the Market Edge, that is on our video page. But everything else is on the Zacks podcast page. Just put in Zacks Podcast. Subscribe over there and you'll get them every time we launch one. So be sure to get us somewhere, and I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.